Aflac stock has returned significant amounts to shareholders over the last decade. If you had invested $10,000 in 2012 with dividends reinvested, you would now have over $33,000 compared to the S&P at just 29,000. And you can see it was kind of a wild ride in here, but we're going to get into it and we're going to look at what Aflac the company is and does right here today on Stock Stories. Now, you probably remember this famous duck from all those commercials over the years if you've watched any television. And you've seen that this is a company that has a big marketing campaign with this famous duck. But what do they actually do? What does this company really sell? So let's look at it right now. Hi, my name is Alex Mason. I'm your stock storyteller. And here on this channel, we decode the business behind the stock. Now, Aflac is an insurance company, but they're kind of a niche insurance company. They focus on supplemental insurance. And what that means is they're not trying to be your main insurance provider, but really just kind of fill in the gaps and the holes in coverage that you may have if you have cash needs if something bad happens in the future. An example would be cancer or major medical expenses, life insurance. They fill a lot of those gaps with their type of coverage. Aflac has over 50 million customers around the world, and these customers are split between two specific geographies. One is in the United States, and they have accident and disability, cancer insurance, other types of health insurance. And then their other half is in Japan, and they are huge in Japan. In fact, 1 out of 4 households in Japan actually has Aflac insurance. That's how big they are. And they actually have 49% of their premiums in that country is specifically through cancer insurance. Now, the name Aflac stands for American Family Life Assurance Corporation, and the business was started in 1955 in Columbus, Georgia by 3 brothers. And they got together and they realized they couldn't compete with the big guys in the insurance space at that time. So their father unfortunately actually died of cancer, and they decided, you know what, let's create a product around that because they saw firsthand how it was really expensive to care for him in his final days of life. Instead of going through the old school methods of going door to door and trying to sell to individual people, which is how insurance was sold back in those days, they decided to try something different. They went to small businesses, so businesses between 100 and 500 employees or so, and they negotiated these group plans. And fundamentally, that's how insurance businesses work. They collect premiums, they invest those premiums in a low risk way, ideally. And then as people make claims, they pay out those claims. And then what's left as the difference is the profit for the insurance company. Now, one of the brothers was on a trip to Japan in 1970, and he noticed all these people wearing surgical masks. And he thought to himself, wow, a culture this health conscious would probably buy cancer insurance. So he brought the ideas back to his brothers. They went to the Japanese government, and it took them years, but they were eventually successful in lobbying them to allow them to sell cancer insurance within the country, which was the first foreign company in Japan to ever do so. The cancer insurance in Japan was enormously successful. It grew really fast there. And it even grew to the point where a lot of the Japanese were surprised when they found out that Aflac was an American based company because it was so prevalent. Now, Aflac continued to grow in the United States, but they grew in Japan even faster to the point where today in 2022, 72% of Aflac's revenue comes from their Japanese division. Let's go ahead and take a look at the financials. Okay, I'm here now at the ticker terminal, and the ticker symbol for Aflac is AFL. And we're going to go ahead and look first at revenue. Look at this revenue chart from 2017 to 2021. Now, in 2017, the company made over $21 billion in revenue. Fast forward to today, $22 billion in revenue. So revenue has been flat. Like, what's wrong? A lot of businesses don't stay flat like that. Either they're growing or they're declining, and preferably growing, of course. But in this case, it's pretty flat. Now let's look at the profit. If we go down to the net income, this is what we see. Now looking at net income, this is what we see. The business made over $4.6 billion 5 years ago, and it's about $4.3 billion now. So, again, the net income has been relatively stable with the revenue growth. So, nothing really exciting going on there. But I have to ask myself the question as an investor like, why is this happening? Now, when trying to answer that question, I decided to look at some macroeconomic data. Because this company is so heavily dependent upon Japan's economy, I decided to focus in on Japan. Now, if we look at the age distribution of people in Japan over the last decade, we can see this clear trend that the population of the country is gradually getting older. In 2020, there were more people who are 65 years or older than there have been over the past decade. Over 28% of the population is over 65. I felt like that wasn't really answering the question, so I dug a little bit deeper, found some more data, and here's what I found. Japan's population overall has been declining actually in recent years. We can look at this trend all the way back from the 1960s. In 1960, they had somewhere around 90 million people in the entire country. That growth then the country grew over time to the point where in 1990 they had over 120 million. The year 2000 they had over 130 million. And then since 2010, though, this past decade, the population has definitely declined slightly. And if you think about this from a business perspective, if you already dominate your market in a certain area and the population is declining, the only way to make more money is either to raise your prices or increase the frequency with which people are buying your product. And I don't think that's happening here in Aflac's case. They're already dominant in this cancer insurance space. So if they want to grow, they're going to have to find other ways to do it. Now, jumping back to ticker, let's look at the valuation and see what's there. So if we look at the valuation tab, and we go down, let's look at our normalized price to earnings ratio. We can see that the price to earnings ratio of this stock in recent years has actually been around 10 or 11 times earnings. So, really not too bad. For an insurance company, this doesn't seem too bad, really. And then 2022, our price earnings ratio is more like 12 times earnings on a normalized basis. So, that's a little bit high, if you ask me. One good thing I like about the stock, though, is the dividend. The dividend yield is solid at 2.6%, but I think what's more important is the dividend growth over time. And if we look at the dividend growth, this is over here on macro trends, the dividend payout has gradually increased over many years. So in 2003, for example, they were paying out around 8 cents per share. 2010, 43 cents per share, ramping it up to 2020, $1.07 per share. And then now the payout is around $1.45 per share. So pretty solid dividend growth there. And we can see that they're raising it pretty much every single year. So if you're a dividend growth investor, Aflac might be one to look at. But from a total return perspective, I'm not that attracted to this company just because I'm worried that they're not expanding in new markets and in new products successfully as I would like. I haven't seen that evidence yet by looking at the financials. So as much as I love the commercials, I'm going to pass on Aflac stock for now. I mean, if they were trading super cheap, I might be interested. If they had a crazy dividend yield like 4 or 5%, I might be interested because that in combination with the growth would be some pretty great returns, but that's not the case in the market today. Now, one stock that I do really like right now, you can check out right here and see my analysis on that. Thank you so much, and I'll see you over there.